Magnus Heystek, Brenthurst Wealth Management founder. Magnus, this wasn't your first budget speech and it certainly won't be your last. What were your main takeaways? Just a high-level analysis to start up with.
I think my impression was it's like a new Springbok fly half. He's having his first game. The whole world is watching his moves and what he's going to do. And I kind of got the impression he was a little bit nervous at start and he was jumping around. But then he got into his rhythm and it wasn't a bad speech. I mean, let's be fair. You know, it was a very neutral speech, came across well and with a bit of humor here and there. So it wasn't too bad, but it's early days. I must tell you that. And I must tell you what, as they say, as Gary Player always used to say about luck. Luck counts. Now, the new Minister of Finance came into the position with a tremendous amount of luck in the form of the commodity boom. And we've spoken about this on this program, I think going back a year already, where I said South Africa, the lucky country. And suddenly you've got this enormous commodity cycle bringing with it an enormous economic and tax windfall of anything between 180 and 200 billion rand. And that changes everything. I mean, any Minister of Finance would love to go into a budget speech knowing that there's an extra 182 billion in the bank, and he can come across as being very generous and he's going to get a great coverage. But that's the danger. The danger is it a windfall? Is it permanent? And how are they going to deal with the fact if it is not permanent and the commodity cycle goes down again, heaven forbid, as it has done in the past 2011 previous cycles, and they go down very dramatically. And then, and that's the big issue. Is this a short-term windfall, or is it more permanent? And we'll only time will tell.
Magnus, what is Treasury looking to do with this windfall? And with your concerns, what would you do if you were in the position of the finance minister with this great windfall that has come as a result of the tailwinds from the commodity boom?
Well, from a purely economic point of view, the windfall should have been used mostly to reduce our fiscal situation, the slow movement towards a debt standstill. But from a political and a socio-economic perspective, we're sitting with an unemployment number of 40% plus. We're sitting with tremendous human suffering across the country, job losses, people without jobs. And I think it was a very, very hard decision to make. What do I do first? And I think it's a balancing act. About 45 billion rand of that is going to the extension of this basic, the unemployment grant. And now the big debate is it going to become permanent? And afterwards, on one of the TV channel interviews, the minister was not very specific. He dodged this issue about whether it's going to become permanent or not. But nevertheless, that issue was also raised by Isam Mshlangu, the economist of Alexander Forbes. He wrote a very, very good piece 2 days ago warning that if this becomes permanent and at a higher level that a lot of people are pushing for, we could be running into serious financial difficulty 2 or 3 years down the line. And that is your danger. So it's a mixture of politics, what needs to be done, common sense, and of course, and in South Africa, nobody's always happy or unhappy. It's a little bit of everything.
Magnus, let's talk a little bit about the infrastructure spend. We heard about it first around 18 months ago. Whether it's been implemented or not, we don't know. If I look at the results of the construction companies and the management that I chat to when their results come out, there's no sign that this infrastructure spend is in action. They still spoke about it today. What were your takeaways from that little theme, the infrastructure-specific spend?
Yeah, it's quite clear that if you speak to anybody in construction, they are all looking a little bit askew and looking at each other and saying, where is this construction spend? It's not happening with my company, but and quite bluntly, it's not happening. We've been talking about this for how long? Sonar speeches, budget speeches, this massive infrastructure spend, but it still is not happening. Let's hope it starts rolling out quite now. The big problem is do we have the capacity left in South Africa to handle such big projects? A lot of our big construction companies have laid off people, have merged, have closed down, and our construction sector has shrunk fairly dramatically. There's been an exodus of skilled people, engineers, road builders, to other parts of the world as a result of the non-delivery in South Africa. Now we have the issue of infrastructure being included into pension fund assets, type of prescribed assets. The large pension funds are already saying that they would love to get involved. But the big issue is, are there projects that are bankable and will produce a return to the investors? Because remember, this is not government money, it's not taxpayers' money, it's pensioners' money. And this is where it's going to get very, very interesting. We've already seen on Sunday, we saw Professor Mark Swilling, he's the chairman of the Development Board of South Africa, saying that the construction mafia has to be dealt with. They have invaded most construction projects across the country. So this is not just bar talk. This is from the top saying it's a reality. Anywhere where there's construction activity in South Africa, these guys just rock up, intimidate the workers, the staff, saying, we want 30% of this contract. And people are closing up shop. We've had people killed in Richards Bay a while ago. So this is a real problem. There's the mafia-style intimidation of construction industry. And you now have the pension fund managers who would like to spend money in that sector, and it still is not happening. This is a very problematic. How do you put all these moving parts together that in the end of the day, it adds to the upliftment of the economy, of South Africa's future, but produces a return to the investors? And if it doesn't produce a return for the investors, because this is going to be watched by the media, guys like yourself, myself, how will individual investors react if they see that their money, which is going into infrastructure partially, is not returning any kind of returns beyond inflation? So that's a very, very interesting period we're moving into.
Let's talk about Eskom for a second. Almost unequivocally, analysts and strategists like yourself see Eskom as one of the major threats to South Africa's financial health. The debt burden has been slashed somewhat, although there's been tailwinds such as favorable currency movements. The sustainability of cutting that debt is a little bit unknown at this point. What were your takeaways from the Eskom specific part of the minister's speech?
There wasn't much about it that struck me. I mean, we all know that the Eskom problems going back 12, 13 years has been a massive macroeconomic dampener on the South African economy, in the sense that no major industrialist will open up a plant if they're not sure about the electricity supply. The same goes for gold mines, platinum mines. So there's been very, very little new developments, new grassroots developments. As a result of Eskom, so many industrialists that I speak to said, I'm not opening up a factory if I don't know I can get power. Why would I do that? The foreigners are moving away. So we've already paid the price for Eskom. It was heartening to see that, I think, 136 billion rands of Eskom debt has been paid off. Now, that's going to be interesting how it's been done, but that was the announcement. We'll have to now go and analyze that number. But the Eskom issue is still this big, massive gorilla in the room, and how it's dealt with. Are they genuinely busy breaking it up into three parts, as I've said? Are they going to allow the private sector to come in and produce their own power to assist the national grid? And it's all a mixture of economics and politics, which in South Africa tends to become very murky and in some cases quite bloody.
Magnus, are the facts changing with regards to South Africa as an investment destination, or is it simply too early to say so?
No, it's way too early to say so. One must accept that the rand and the global markets, we suddenly, and we're talking 6-7 weeks barely, the rand has strengthened, been one of the best performing markets, but it's been driven by commodity. And if you can look at the stocks on our market that are running or have been running, platinum, chrome, iron ore, and then interestingly, one or two banks. Now, I come back, having been in this business almost as long as Alec, that the commodity cycle bites you in a very sensitive place when you don't expect it. Just as you think we are in a new commodity super cycle, you've got it tapped, you know everything, you've supply, demand, equilibrium in the markets. Something changes, a war breaks out, or worse, peace breaks out, and boom, the market changes. So the danger is that this commodity cycle is unpredictable and very cyclical and can turn around very, very quickly. So it's very important how government handles this windfall, added to how it's going to deal with the basic income grant. I've now read 3 or 4 reports in the last week from various economic commentators, but very serious economic commentators. I'm talking about Isa Mashlango, I'm talking about Claude Baysak, I'm talking about Dr. or Professor Ricardo Hausman from Harvard, and the 2 others that I've read, and the lights are going on and saying, if this is not handled well, we could run into a major, major fiscal problem 2 to 3 years down the line, and that will normally take the place of a debt standstill and then a currency crash. Those 2 factors have not gone away, Justin. And to answer your question, it is nice to look at people that their local assets are now starting to perform, but that doesn't mean the strategy, the offshore strategy that we've been following for 13 years now, has changed. Not one of my clients has phoned up and said, bring back my money. That's not happening. They are very happy, very comfortable with that long-term strategy.
Magnus, I've got 3 questions on the pension fund amendments that are being held for a Gazette next month. The first is very simple. What are the current legislation with regards to pension funds and regulatory 28 funds in South Africa currently?
Well, we basically touched on them. One of the regulations coming through is this 2-pot approach by government, where they're going to basically create 2 pots in your pension fund, the 1/3, 2/3. And if you run into financial difficulty, which will be very strictly defined, you will be allowed access to that 1 pot under certain circumstances, etc. The 2/3 pot will remain there for the rest of your life, which is very interesting. Many commentators have missed. This means you cannot withdraw the 2/3 pots for your entire life. So that money stays there from the day that you join the fund until you retire. So no more early withdrawals and withdrawals from pension funds, which is quite a significant move in the preservation of pension funds for South Africans. Because South Africans are notoriously, when they run into financial difficulty, they run to the pension fund, whip it out, either resign, pull it out, and they start all over again. The second part is, of course, this infrastructure, which will now be allowed in terms of the amended Regulation 28 rules. And pension funds, I'm talking about the big funds, Alexander Forbes, Mutual, Sanlam, will be allowed to, based on trustee decisions and fund managers, a certain percentage of their capital into infrastructure plans, whether it's 5 or 10 or 15%. That depends on the manager stroke trustee, which, as we discussed earlier in this program, sounds great on paper, but will it eventuate in reality? Or would I rather say, like the Irish say, we know it works in practice, but will it work in theory?
What are you looking for in the amendments next month?
You know, I can't answer your question. I mean, there's not much that we can do. We need to know how first of all, what impact, and this is a slow-moving target, we won't know for at least a couple of years, what impact the exposure to infrastructure projects in South Africa will have on retirement fund returns. We can only speculate. We can only trust the fund managers that they've done their homework. So we'll be watching that carefully down the line. And what kind of choice will they give people? Will they give people choice and saying, are you happy to put money into an infrastructure pot or not? Or will it be one size fits all. So those finer details we don't know yet, and that could become quite interesting.